the World
or
Wide
it's just
Web.
recorded.
Oh,
Yeah, you're an internet sensation
we
now.
are up to date. Yeah.
Well, I call a meeting to order of the Decatur Township Public Building Corporation. I think we have a meeting right after. There's another meeting in the spot at 6 o'clock. So I don't know about anybody else, but I had questions. So let's see. Call to order. We do have a quorum. Everyone is here, and the agenda was posted, and we've all signed the waiver. Do we need to make that?
You just need to acknowledge it.
Acknowledged. Okay, we all signed the waiver of notice. Okay, now we're on to consideration of a resolution authorizing the issuance of bonds and related matters. Stephanie.
Yes. So basically the project that we discussed last week, or excuse me, not last week, a couple weeks ago now, the township board will be working with you to be able to issue the bonds, and the bonds will be issued in the name of the building corporation. And basically the structure is that, so the town building corporation will have the property, and the township will use property taxes to pay lease rental payments, which will then pay the bonds. So there's a correlation in the lease rental payments that they pay and how you then pay the bonds going forward. So the terms for these bonds are 20 years, and they're a not to exceed amount of $20,350,000, or excuse me, $20,350,000. Yes. The project itself is $20,600,000, and we have Jeff Peters here today too to talk more about the financing, which you might have questions about, and he can go over the interest and all of the financial calculations. But basically, what you'll be approving tonight is the structure of that bond transfer, and then it will go to the township board. Tonight, they will have their first hearing on the project for a couple of steps that they have to do, and then next week they will have their final approvals of these of the bonds as well. So that's just a very brief overview. I figured you might have more questions about the finance part.
And there's all the documents.
Sure.
Yeah. Is anything that we going to be doing any different from any other township?
No, this is a very common procedure.
Okay.
We do it all over the state, especially with fire departments and fire stations to be able to finance them.
Okay.
And part of it has to do with the whole Indiana Constitution and debt limitations. And so that's part of the reason why it's structured as the lease then, so that you can make sure that you're not hitting the debt limits for the township. But right now, you don't have any debt service levy right now.
Okay.
Did you want Jeff to present first?
Well, what are we expected to consider and sign off on today? Is it
just the resolution? So the
resolution invoke the long document?
So the two documents that you got, and I brought copies in case you needed additional copies. So the trust indenture, basically, this is just the form. Okay, this is not the final version. The final version will be signed off later on. Basically, it is the contract between the building corporation and the trustee, who is yet to be determined. But the trustee is the one who will oversee the transaction really for the 20 years, to be able to make sure that the bondholders, get their interest, and that the lease payments are, accepted and properly paid off for the bonds. So that's, it's a lot in this document. It's very much dictated a lot of times by the banks that act as the trustees. So there's a lot of provisions in there that are very standard in the trust indentures, but happy to go through any of them that you might have questions on. And then the other part is actually a continuation of a document that you approved the form last time. So last time you approved the form of the lease, and basically this addendum to the lease was an exhibit to that. This addendum also will be changed by closing, because we don't know the numbers to put in there right now. We don't know the exact amounts. We will know that later on. And again, like I started, your lease rental payments are going to want to match your bond payments. And that's what is pretty much shown in this document, is that the lease rental payments will match paying that principal and interest.
So this
going
is
forward.
signing off on the format?
Just the form, yes. This part is, so they're both included in the resolution, that you're really just approving the form of these.
Okay.
You're not signing those documents tonight. They're not in final form. They have to be, information needs to be determined going forward based on the bond structure. So that's really, the resolution that you're doing really is approving the bonds and the documents that will be needed going forward to continue that transaction.
Okay.
And,
Go ahead, Ken.
well, the bonds are handled like any,
Yeah, working with an underwriter. The underwriter will then work with the market basically to, get the bondholders to agree to the prices, and that's how we determine the maturities. And you could probably talk more about the financing part, but that it's very similar to municipal bonds, though. Municipal bonds tax exempt, so there's some interest more than in them.
okay. So you'd see these advertised then?
I don't know. We decided which way we're going. Yeah, please, Bill.
Jeff Peters, your financial advisor, and in this process, we'll serve as your fiduciary in this, so that we'll work with the underwriter as to the pricing, as to when it goes to the market. But you're going to have a negotiated underwriting. Your underwriter is going to be Stifel, that deals a lot in tax-exempt municipal financings, particularly in Indiana. The process that we're going to go through as you deliver these approvals, we are also going to go out and get a bond rating for this transaction. So that bond rating will help you get lower interest rates in the market. Stifel, along with us, will help set those pricings based on what that bond rating is. If it comes in high enough, we won't buy insurance on the bonds. But if it's something lower than we expect, where it's a 1 or 2 position rate jump, we potentially will buy bond insurance that insures those up to a AA, which again will get you lower interest rates. And the typical strategy on that is, when we're talking about numbers this big and a 20-year amortization, a few basis points on interest rate makes a big difference versus buying an insurance policy in the front end.
But a basis point is how much of a percent?
100 basis points is 1%. So whatever we can do to get the best presentation to the market will get you the lowest amount of interest rates. And although you are going to negotiate the sale through Stifel, we will pick market dates into the future that we can slow down or speed up, kind of depending on if there are any weird market shifts. And that's one of the things that we like to do, the negotiated underwriting, rather than pick a date in the future and say, on this date, we're going to do a competitive sale and we have to take the best or turn them all down. Because when we have funny things happen in the market, it doesn't allow you to step back and say, okay, we're going to sit on this for 3 or 4 or 5 days, and then go back in. Stifel will have a whole group of, it's kind of like a select competitive marketing of those for people that they deal with routinely. And you'll have basically the same benefit as a competitive sale, but Stifel will step in, they'll negotiate with their people, and at the end, if there are any bonds left to purchase that other people didn't bid at the lowest price, Stifel will step up and buy those. So that way, all your bond sale occurs at that same time on that same date. Then we know, again, what's fixed, and we can revise all these documents so that we'll know what that amortization is, your lease payments, as you talked about. The trustee, through the budget process, will levy property taxes on people, just sufficient to make principal and interest as it comes due. Trustee will pay that money over to the building corporation or to the trustee through the building corporation. However, it's
The other
written in there.
trustee.
The other trustee, the bank trustee.
Bank trustee.
Yes. So payments go from the taxpayer to the township to the building corp, who technically hold the bonds, and from the building corp to the bank trustee, who will then pay all the bondholders principal and interest as it's due.
Not to cast any aspersions, but you said Stiefel, do they have an incentive to keep the price down?
The price as to the actual
bonds?
interest rate.
I guess it would be the total of interest plus principal, but in any case, since they would buy what's left
we-
over.
Yeah, they would buy what's left over. We basically supervise them in that pricing that initially goes
Who's
out.
we? I'm sorry.
We are the financial advisor, your municipal advisor, and your fiduciary,
Peters Franklin.
Peters Franklin.
Oh, okay.
Yeah.
Mhm.
So our firm will step in and serve as that role to make sure that you get the best deal possible and to make sure that Stiefel doesn't do something like that. The other thing is all these transactions are
Routine.
public documents. Yeah, they're routine, they're done all the time, and they're public. So if Stiefel were to ever, be
Inflate
deceitful,
or-
inflate, yes, somehow swindle a client, it would be public knowledge within a couple days, and everybody would know. So it's really done in the light of day. There's nothing really that you should worry about on that aspect.
And there are safeguards in here, again, not to exceed, I think it's 6.5% interest rate.
Something like that. And yeah, we'll have
But right now,
coupons.
what's municipal rate tending? It's gonna be less than 6.5. That's what
It's
mortgages are.
it's well less than that. But the other thing that in the market, people will pay a premium today. So if we sell 5% coupons, they'll get 5% in those future years of tax exempt income.
Mhm.
They will pay a premium for that today, which you get in dollars up front. So then we're not really going to borrow or have bonds outstanding of 20,350,000.
Mhm.
It's going to be 18 million because they'll pay 2,350,000 up front in premiums, which will again buy that interest rate down, or the net interest rate. And again, all that math gets worked out in the sale, and we do it to your lowest net interest cost.
Now, are you the person who calculates the tax rate that falls out of all that?
Yes, and the tax rate that we've estimated, and I'm looking at a net interest rate of 4.75. And again, I'm trying to be conservative for the public when we talk to them at 6 o'clock. That debt service levy would be about $1,555,000, and the rate would be about 5.66 cents per hundred.
And is that a before or after the cap calculation?
Well, it'll be before the cap, but because this is a debt service fund, it is a protected fund. So it will not be subject to the 1%, 2%, and 3% tax caps.
So it is
So-
outside the cap then?
Well, it's subject to the over 65 cap.
So,
So it will have some deterioration, but not for the 1%, 2%, and 3%.
okay, you went in a circle that I did not follow.
You have tax caps of the 1%,
Mhm.
2%, 3%. You also have over 65 is another tax cap category.
As age.
Age.
Mhm.
That category will erode part of the tax collection for the debt service fund, but the 1%, 2%, and 3% will not.
Okay, I'm thinking as a taxpayer.
As a taxpayer,
Payer, is this before the cap is calculated?
it is before.
Oh.
It'll be part of that.
Is it
Gross
in
rate.
addition to your
It's going to
capped
be
amount?
it's going to be in addition to the rates you pay today.
Okay.
But you'll still get your tax cap credits.
Oh, no,
It's not a
yeah,
referenda.
yeah.
Any tax cap losses that come on the 1%, 2%, and 3% side will mechanically flow back to
Mhm.
the township operating. Well, I shouldn't say that. the fire operating fund, the fire cum fund, you guys almost have the exact same tax base for fire and civil. So it'll also go back towards civil, township assistance, etc. But the only true mathematical loss of cap credit to the debt fund will be the over 65 credit. But it should not be enough to impair the bond payments to be made from the debt service fund to the building corp. If they are,
Yeah, that's like
The
an over
township will make that
65
up.
plus a certain income.
yeah, I don't know
Yeah.
the particulars of that. I
Yeah.
just know
Okay.
as it comes across, it will hit that fund, but the others will not.
Several places, it sounded like the date that you pay the principal is different than the date
That you pay the
the.
lease, yes. So we have 15 days.
Mhm.
So trustee at the latest point will get tax distribution on June 30. July 1, he needs to make that payment to you guys. And by, and then the money needs to get from you to the bank trustee. And the bank trustee by the 15th of July and the 15th of January will then pay all the bondholders. That's the difference in the dates. His payment to you, your payment to the trustee's payment to bondholders.
The principal and interest sounded like they were on different dates.
The principal and interest are on the same date, but they're not the same day as the lease rental payments.
Okay, yeah, okay. And is there, they're talking capitalized interest, and is there a period of time in which it's only interest payments being made?
The capitalized interest, when we do a lease structure, we cannot make principal payments on the structure until you can occupy it, unless you pledge a replacement asset, which is what you're going to do.
And the
And
replacement
the
asset.
replacement asset is a different fire station that's free and clear.
Somewhere else, not this one.
This one does. It says that's
Okay.
So
one of the other two.
that asset will allow you to make principal and interest payments immediately. The problem is when I calculate the interest in this scenario, and again, this is at 475. Hopefully this either goes away or it goes down further. But I'm estimating I need about $77,000 in interest on the first lease payment to cash flow, because if we close August the 13th and I make my first payment on July the 15th the following year, my interest expense is going to be greater than what would be basically half of my lease payment.
Okay.
So I need a little bit of money in there to cash flow that, because the bank trustee is not going to float you $77,000 to make payment.
Oh, please.
That's some change. We're talking.
It should be, yeah. So potentially that will be in there. It should be less as we actually get real interest rates, and it may actually go away entirely. We'll have to wait and see.
So some work has been done, not physical, but mental work, I guess, for all the different groups that seem to be involved in all this. So was I correct in thinking that these documents are saying that they would be reimbursed for that? Those payments, I assume you guys have received some payments so far? No?
We
usually
get
don't
paid
pay
at
closing.
close,
Oh.
when the transaction closes.
But
Typically,
if there,
everybody gets paid.
but if there are expenditures that the trustee needs to cover that are related to the project that have happened 60 days before, that's the part that can be reimbursed.
Okay, 60 days, okay.
Yeah.
Okay.
So like
So-
engineering fees,
Yes.
other things like that,
Yeah.
surveys, those, if they were part of this original thought out project cost, then they may want to tally those and give them as a reimbursement, because it's part of the cost, but it's not going to be expended after the time we issue the bonds, because the trustee already paid them, but he can refill those funds that he spent in that period of time.
It's a
That's already been calculated into the maximum 20 million.
project amount.
Yeah, we're looking at just the project amount, irrespective of whether it's been paid yet or not.
Okay. Started printing out things. Okay, so these are just the blanks. I don't have to worry about any of the blanks because that's just part of the form.
It'll come later, and then there'll be, at closing, there's a whole bunch of documents that you'll get to sign.
Okay, on page 13 of your trust indenture. Oh, and I decided that the folks in high school English class who kept doing run-on sentences, they're all bonded. to
They're all
the
the
same.
same.
So,
Yep, that's true.
so then just before part C, it says interest will be calculated on the basis of 360 days a year. It's just. What
That's
happens
standard.
if
It's
What
standard bank.
all financial
Yeah.
institutions,
they
banks,
just
they all
forgive you
calculate
5
on
days?
33. Oh no,
No.
they just calculate everything they do on 3360 because that's the standard.
30 days a month, 360 days a year. So
But
there's,
aren't there 365 most years?
yes.
But no, they're not forgiving you those days.
Five
They
days,
just
okay.
up the interest rate to make it on 3360.
Going back to a question here, what determines what somebody is willing to pay for a school corporation? How does school corporation rates change from year to year? Why would we be more valuable when, I mean, the market is changing, but why would a school corporation be changing from year to year?
As the building corporation.
As a
for
building
this.
corporation,
Yeah.
as a building
It's
corporation.
the tax exempt, but not from year to year, but I mean, it's the,
I got lost on this question.
This is the fire or trustees department, not school year, yeah,
Oh,
but it's the
all right.
same. But he's.
I think what you're asking is like, so there's different principles and maturities each year, that could be for the next 20 years.
Oh, why would those interest rates be
Yeah,
different?
why would they be?
Why would the principles be different each year? Maturities,
The-
excuse me, maturities of the bonds.
Yeah, the principal will be different because the interest will be different over that time period. The interest rates will actually change because in that short time period, there's a lot less risk. The further they go
Okay.
out, the higher the
Okay.
interest rate goes.
Okay,
But again, sometimes over time we have
okay,
where that will come back down if the market believes that market interest rates are going to be lower at a certain point in time.
so the length of it affects it.
Yes, and then the length of what they bid or coupon those payments at, if it's going to pay 5% in that future time period, its net interest cost or its yield might be 4%.
Okay.
And those amounts will change according to whatever the market circumstance is. And those people who speculate, I need a 5% tax exempt coupon in 2032. And somebody else may be like, well, I need a 4.25% coupon in 2032.
Okay.
So it's a lot of calculus and just who actually needs it for whatever specific tax purpose.
So the value of the thing doesn't make all that much difference, whether it's 20 million or 40 million or 3 million. It's more market driven.
Yes.
For a time period than dollar. Okay.
Yes, and it's driven on whoever's buying its
Buying
needs and tax consequences
Okay.
of what they believe they're going to need
Yeah.
as tax exempt versus, taxable income, et cetera.
Okay.
The idea that the proceeds of the bonds would be invested to create interest, or,
Yes.
give, make some money on the money while it's sitting there.
Yes.
That presumed interest has already been calculated into the
It
amount.
has. I put in sources and uses to buy down the project from 20,600,000 to 20,350,000. So I took a conservative stance that you would produce $250,000 in interest earnings during the construction period. I based that on 3% interest and the outflows that the engineers gave of how they thought that fund would flow out. Again, hopefully it'll be more money than that. The vehicle probably will be recommended by the trustee who holds the funds. So they'll probably give you an option. Will that be a building court's option or the trustee's option?
I think it's a trustee with the advice of.
Okay. So whoever holds the fund at the bank, they will invest it in certain
It
things.
says that in the absence of investment instructions from the corporation, which would be us, I'm thinking we're not going to be the best at instructing how to invest those funds.
Yeah,
So that would the
Yeah.
instruction.
Yeah, it'll really pretty much be the trustee that's holding the funds. They'll say,
The bank
here's
trustee,
A, B,
yeah.
and the bank
Yeah,
trustee,
okay.
yeah, and the bank trustee will say, here's A, B, and C, and right now, the best one is B.
And that might change every year.
Yes.
Yeah.
At the
Some-
time you do it and make the investment. And again, they're all gonna be really close.
Mhm.
And
Okay, yeah,
my
'cause-
hope is it exceeds the 3% we estimated.
Well, maybe Samantha's really good at that.
Maybe.
Maybe. Let's see. Okay, and the lien on the building will be until the bonds are all paid back, right?
Yes.
And everything's kosher. I mean, again, what can go wrong?
Yeah, yeah.
You have insurance, and we talked a little bit about that last time. If something goes wrong with the building, and you have 2 years, I believe, of insurance to cover that, so that if you have to restart the project and make it, that's what's going to sort of cover that gap until you decide what you're going to do next. If you're going to refinance the bonds, or
Well, the
whatever.
insurance would pay for, say, one part of the building burnt down. Apologies.
The
Then-
non-fire part. It's the interruption of the project, basically, to make
But you
sure that
would
you still
have
have
to
it.
then have more funds to rebuild that portion of the building.
Well, you're going to decide what you're going to do next, basically. I mean, if something like that is, catastrophic and it happens, that gives you the time to figure out, are you going to rebuild the project? What are you going to do next? And yes, so that would basically be almost like a new project, but this would keep you going so that you're not defaulting on the bonds
Okay.
in the meantime.
Okay, so it's insuring the bonds a little more than the building?
I mean, you are going to want to make sure that you don't default on the bonds.
Oh, yeah.
Mhm.
Okay. You have questions?
All tracks
Just see. So what was on the bonds, there's one place where it said, it's the 6.5%, which is great, and the 2,350,000, at least it was, max numbers. Maybe the bonds may be sold at a price not less than 99% of the principal amount.
So
And then
the-
there's another place where there's a 1%. So what's,
Yeah,
what's
so
going on with
the
those?
underwriter, Stiefel,
Okay.
they charge a discount, and that's how they get paid on this transaction. And it will not be greater than 1%. It will likely be 0.0075. So it'll likely be 0.75%.
That's
is what
their
they will
fee.
charge.
Assessed,
Mhm.
Yes.
Okay.
And that's for them to run the entire sale and basically competitive sale inside their circle, and for them to step up and buy anything else that didn't get sold. And that's typical is 1%, or a little less than that on a transaction this size. And I'm pretty sure the document that came over or the pricing will be 0.75%.
That's something you negotiate then, or?
It's pretty much a standard
Standard,
around there. Sometimes it's a little lower. Sometimes a little lower than 0.75%. Sometimes it's 1%. If you get into a smaller transaction, sometimes it gets above the 1%, maybe up to 2%. But yes, that would be common for this size.
And these additional bonds, I'm not sure I could clearly figure out when additional bonds would become.
If the township explodes in growth and you decide not only you need to replace this station, but you need to go build a new.
Mhm.
Now you're set up as a building corporation to go do a whole new set of bonds and do another station.
Okay, so it's a new project.
Correct.
Yeah.
It's additional projects.
So that could be considered separate.
Yes.
Okay.
Yes.
Being ambitious.
We've had people build stations too, but
And what's bands stand
Yeah,
for?
Bond anticipation notes.
Okay.
So basically, if we weren't going to go to market right away and do these bonds, which we anticipate we're going to do,
Okay,
if you want to do a shorter term financing, that would be a ban.
okay.
And then usually you use the bond proceeds
Paid off.
to pay off the ban.
the bad thing about the ban is you basically have a financing and a half because there's a whole bunch of costs to issue the ban,
Yeah.
and then you issue the bonds to take out the ban.
Huh.
And right now we're in a good marketplace. Interest rates are very reasonable, particularly if we look at history. By the time we get to market, maybe we'll have another rate cut or so it may be even better. But yeah, we're in a good position now to do long-term bonds. Things are relatively stable. I say that with
Keep knocking on wood.
Thank you for
I don't know what
Things
could
have
be.
been around, it seems,
what could
but,
come in the next month. But
yeah. So why are we authorizing bands then?
Because if you want to go through with the project, that's the important part, right? Is that you want to make sure that this project can go on, that it can get to starting on construction. And because we don't know if the market changes dramatically tomorrow and it makes more sense to do bands, this gives you the flexibility to be able to do that.
Okay. Okay. It's not locking in
No,
one approach.
no.
Okay. Yeah, because it seems like things have been erratic to me. I don't take a historical perspective. Okay. There are other questions? Printed off what I could.
Okay.
Can you explain defeasance? It sounds awful, but can you
What?
explain what it is?
Paying off the bonds, basically.
Oh,
Okay, that's good.
Mhm.
Okay.
yeah, you
The bond-
basically send the equivalent of what it will cost to pay the bonds until such time as you can call the bonds.
Mhm.
And you give that to a bank trustee, and they hold and invest those funds for that time period. And they make the principal and interest payments on the bonds that you can't call.
Okay.
And the call is on an issuance this length. Typically, in 10 years, you will be able to call the bonds, which means you can go redeem them all, no penalties. You just pay off the principal, and those bondholders all go away.
That's like some guarantee to the people who are buying the
People
bonds.
who buy
that
it, yeah, they know for the first 10 years, they're
good.
not going to get called. They're going to get paid based on what it is they bid and, the structure.
And would different bond holders be sold at different prices?
That's what we were talking about before.
So these people around the table could end up at different prices?
They could, yes.
did you discuss this bond insurance thing here? Is this a recommendation or?
Well, it's not a recommendation until we get to the math, because first we need to see, your township hasn't had a bond rating in, I don't know when, if ever. So we did talk to the trustee about getting audits, because you need to have current audited financials, and we'll go to Standard & Poor's and we'll show them this transaction. We'll show them the size of the township, all the demographic stuff of the township, the billions of dollars of assessed value you have. They'll look at the entire thing and they'll give it a rating.
Okay.
If that rating is AA minus, which I think it might be, or it might be an A plus based on the size and that you have no debt, et cetera, and how you sit in the central Indiana, Indianapolis market. If it comes in at an A plus, there would be 2 steps up to an a double A minus and a double A. Did I say A?
So
I meant
A double A minus is better than A plus?
Then A
Because
plus.
you have the two
Yeah, A
A's.
plus, double A minus, then double A.
Okay.
If we buy bond insurance, we get a double A rating. And we will get interest rates bid based on that double A rating.
Okay.
So what we do, we basically go through an exercise with the underwriter to look at what does an A plus or double A minus, what do we believe those rates are going to be versus at a double A with insurance. And then see, is it better to buy the insurance or forego the insurance and just go to the market?
And how does that insurance play with the
That
normal
insurance,
insurance?
Different type.
What are you insuring?
you're insuring the payment of the bonds. So,
In normal
If-
course of events without any catastrophe?
well, I would say any circumstance that would impair the bonds to be paid, the bond insurer will stand up and go pay the bondholders. So they won't see any interruption in payment.
So like,
You will have to make them whole.
Yeah.
Oh, you have to give it back.
Oh, yes.
Mhm.
And probably whatever fees and
like
any
that-
costs associated with not making that bond payment.
Mhm.
So the corporation has a rating right now? The Decatur Town, I didn't mean corporation, but Decatur Township?
They do not.
We
And
do
that's what
not
we
have.
need to go get.
Okay.
How long does that take? Is that after
it's in this
the
timeline.
board?
It's within this. It's before we close. We will know.
But it's after the
Okay.
board has their 2 public hearings?
Yes.
Okay. and
There's
then-
other procedures later on too, but it'll be before pricing, right?
Mhm.
Because we want to know
Yeah,
what
yeah.
it's what
Sure.
you
Yeah.
can then price at.
Yeah.
And it usually takes about 3 weeks between the time we have the call with the rating agencies, give them all this information, and then they do their analyses till we find out what the rating is.
But at this point, we have to get the audits from the Board of Accounts done first. Because the
Oh, the
rating
state board?
agency, without audited financials, they can't really start.
Their analysis.
So all
Have they
that's
started
in
that?
process.
I got late on my request, I just made the request last week, so.
Okay.
But all
That's expedite.
all that's anticipated to flow through this process. And like Stephanie said, we'll have those ratings and make that decision before we do the pricing and the sale.
Okay. And then it's just before this, after Moody's and before the sale that you have better numbers to fill in the blanks?
It'll be after sale that we fill in the blanks.
Oh,
After we get the
okay.
stuff, and it'll be Standard and Poor's, not Moody's, that actually rates this.
Okay.
We'll have good numbers at that point for the sale to then make that decision. And then at the sale time, we'll have the final terms to fill all this in.
Okay. Okay.
And that bond purchase agreement is something that you'll sign off on, and that will have more of the details about this is the prices that we came up with, this is the interest rates for each of the 20 years, if there's any term bonds. And so that bond purchase agreement is again with Stiefel, them saying, we're purchasing these bonds for the purpose of going out to the bondholders, or if there's any that they hold themselves. And that is signed off by the building corporation.
So they make their deal, and then we sign, and then all the blanks get filled in for sure with, they're all below the maximums, but the exact numbers get filled in, and then we sign those, and then they actually transact to sell the bonds. Is that correct? Or have they already
or
sold the
like
bonds?
declare.
No, so
Close, that's a good word, yeah.
So the pricing will have, so it'll be a sale date,
Mhm.
okay? So they'll work and about, noon or so, in my experience, it's about noon, they say, okay, this is the prices. And we accept we being the building corporation, accept the prices by 5 o'clock that day, because it's gotta be that day
Okay, yeah.
that they're sold.
Yeah.
We close on the bonds 3 weeks later.
Okay, so it's like when you go to buy a house, you figure out the price and then you
Do all
fill
the
out all
closing
the
documents,
okay,
and so
okay.
that's when these documents will be fully filled in and everything like that, because we'll know what the prices are.
Yeah.
And so this trust indenture that you see dated as of,
Mhm.
it's usually the first of the month of the closing. So if we close in August, it'll be usually dated as of August 1st.
Other questions?
No, I just, do you do this rating thing periodically then as the bonds mature? Would you do it every 5 years or something?
They may come back to you and say, we want to reaffirm what the rating is, but you do it on the front end because you want to do the best pricing.
Yeah, yeah,
How those bonds are sold in the market after that really doesn't impact you.
Right.
okay, you're right.
However, if we get down the road and we need to build another fire station or do another financing,
I got you.
then normally we take, a
Yeah.
brand new project back to the rating agency and get a new rating. And at that point in time, they'll look at what's outstanding and they'll either reaffirm that rate
Mhm.
or maybe make an adjustment to it. And there are times that they will just reach out and contact you as the trustee in the township to basically reevaluate where it is to see if they agree with that rating or not.
Mhm.
You want to do that because you want to make sure that you keep your rating active,
Yeah.
but it really has no impact on you because your bonds are
Your
sold
bonds are
and
sold.
your amount is fixed.
But it's important to do it at first.
Mhm.
Yeah,
Definitely.
establish.
Yeah, because we could sell these without a rating.
Yeah.
It takes a lot more work from the underwriter side to get them comfortable with a township that's in Marion County and in light of SEA 1.
Mhm.
Yeah, I would not want to sell them unrated because, any variables that you provide that are unanswerable is going to drive up your interest cost.
Hmm.
So if you can walk Standard & Poor's through the process, get a good rating, then you've got much better solid ground to issue your debt on and have the good interest rates to go forward.
So, any other questions on these? So you're looking for us to sign this resolution?
A motion to approve it, and then it'll be a second, and then you can vote on it. And then
But that's the only one to
correct,
sign.
that's just the only one tonight.
And I don't want to forget, we haven't accepted the minutes. So
Yes,
we need to
we were gonna do
that.
that in the other business right after.
Oh, other business is
Yes.
that, okay, I put it aside, so we,
All right.
okay. Is
What?
there a motion to
Yeah,
approve
what
the
if we-
resolution of the Board of
How do we say
Directors?
what we want to
Yeah.
approve here?
Well, I was gonna read the whole title.
Okay.
Is that okay?
Yeah.
Tell me if I got the
Nope,
wrong
that's fine.
paper, but, resolution of the Board of Directors of the Decatur Township Public Building Corporation authorizing the issuance of bonds and related matters.
Approved or
A motion to approve,
I so move.
I second.
so moved to second, all in favor, is there a discussion? All in favor, all
Yeah.
in favor, signify by saying aye.
Aye.
Opposed? Okay, the ayes have it.
Okay.
We will sign it. Has everyone had a chance to read the minutes?
Minutes? Yeah. I think Jason had. some-
Jason had emailed them out.
Oh, here we go. Thank you.
Sure.
Are there any corrections, additions?
We expanded it. Yeah. I move the minutes be approved.
I second.
All in favor, signify by saying aye.
Aye.
All opposed? Minutes have been approved. Is there any other business? Yep, then we stand adjourned.
Thank you all.
Thank
Good job,
you.
everybody.
And you can sign this one. I've got 3 copies of that as well.
Give me the hard surface. Okay. That's-
And your names are on there, so if you want to each take one and circle them
Oh,
around.
there you go. Straight. We did that last time. Save time.
Also,